Today, whoops, we're still going backwards. Hello again, it's Martin North from Digital Finance Analytics. I've noticed posts covering finance and property news with a distinctively Australian flavour. Well, Australian wage growth missed economists' expectations in the March quarter of 2022, according to the latest data from the ABS. The softer than expected wages growth may indicate the RBA hiking less aggressively than some expected next month. The seasonally adjusted wage price index rose 0.65% in March, according to the data. The rate of annual wage growth was 2.4%, up from 2.3% last quarter. That's the highest annual rate recorded since December 2018. The ABS said the annual rate of wage growth has risen for each of the last 5 quarters from a low point of 1.4% in December 2020. But of course, bearing in mind that inflation is reported at 5.1%, most households are going backwards. No wonder financial stress among households continues to build. Wage rises across the private sector were the main driver of growth over the quarter, increasing 0.7% for the March quarter and annual at 2.4%. Regular annual wage and salary reviews drove wage growth for the sector, with a small number of larger increases paid to retain and attract in-demand skilled workers in specific industries. Public sector wages grew 0.6% in the March quarter, and annually it was 2.2%. Wage growth is influenced by both the size of changes in hourly wage rates and the proportion of jobs recording a change, the ABS said. In the March quarter of 2022, the average size of private sector hourly wage rises increased to 3.4%. That's the highest quarter increase since June 2013. And the proportion of jobs recording those rising, at 15%, returned to pre-pandemic March quarter levels, following higher than usual increases in the proportion of private sector jobs receiving a wage increase in the March quarter last year. The March quarter last year was affected by the staggered implementation of award wage increases following the Fair Work Commission's annual wage review of 2019 and 20. Now, in original terms, the rate of quarterly wage price growth across industries ranged from a low of 0.3% for the electricity, gas, water and waste services sector, plus retail, trade and accommodation and food services, to 0.8% for the administrative and support services, education and training and arts and recreation services. Annual wage growth also varied by industry from 1.5% for electricity, gas, water and waste services to 3.1% for rental, hiring and real estate services. Now, the real estate sector's doing relatively well, evidently. And across the states, New South Wales, Victoria, South Australia and Tasmania all recorded the highest quarterly rates of wage growth at 0.6%, while Tasmania and the ACT recorded the highest rate of annual wage growth at 2.8%. The Northern Territory recorded the lowest rates of quarterly, 0.3%, and annual wage growth at 1.9%. So the takeout here is that whilst there are some patchy increases, particularly in industries where there is high demand for skilled services, a lot of public sector wages are still not rising as fast, and indeed, even in the private sector, it's a very muddy and patchy picture. Now, the RBA in their last statement said that their liaison with business is indicating that wages growth is now taking off. Well, we're not seeing it in these numbers, and it could be that perhaps the data that the RBA is using is frankly rather myopic. So to me, it translates to the probability of a 0.25% rise in interest rates rather than a 0.5% rise in interest rates next month. But with the inflation at above 5%, it's clear that the RBA will continue to lift rates. And it will be very interesting to see in the next quarter or two whether wages really do start to catch a bit of a drift up. The other side of the equation, of course, is that the pressure on households is such that they are seeking additional work and additional hours. So we might find that rather than the average hourly rate rising, we might find that the gross income arises because people are just pedaling a lot harder. We'll have to wait and see. Anyway, the bottom line is we're going backwards, and big time. Interesting timing given the election at the weekend. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.